Okay, futures OI scan. This is OI scan under the futures menu. So this is probably the most useful tool that we have, where you can scan for stocks that are moving right now. When once the market opens, you would have to give this a little while for this data to build up, because this today section will show up immediately after the market starts, because this shows you what how the stocks are moving compared to the previous day. What is the price change, OI change? So that is happening compared to the previous day. But this data, 15 minutes, 30 minutes, and 60 minutes section will start showing up. Well, this 15 minutes one starts showing up at 9:30, 15 minutes after market open. This at 9:45 and this at 10:15. So if you are doing some kind of positional trading, or maybe even just taking the trade from today to the next day and maybe a couple of days, then what is suggested is you look at this after 10:15 or so. So the 60 minutes data also gets built up, and then you see it here. And the thing that I do is, if the market is bullish, and for checking if the market is bullish or bearish, the fastest way to do that is to check at the money here, at the money, this trend column, enable the trend column. This is based on OI buildup. So let me turn off Greeks for the moment. So this is build up here, and based on this interpretation, we do the trend column does the interpretation for the buildup. So since this is a long buildup on the call side, it shows up as bullish, and since on this side it's short buildup, it shows up at bullish. So both sides are bullish. The trend shown is bullish. So at the money, when both sides show bullish, the trend bias is bullish. If it is bearish on both sides, then the trend bias is bearish. And if one side is bullish, the other side is bearish, it's a indecision or a sideways trend. And this changes quickly, so you can rely on this trend interpretation. You don't have to look at buildup. The trend interpretation is enough. So once you know that it is bullish, then you can go to OI scan, and then maybe you want to look at stocks that are bullish. So, and you want to be in line with the trend of the market. So then the first thing I do is I look at scripts which are the percentage price change column. Say greater than 1 and press enter. So it will filter out and show stocks or scripts that are moving more than, they have changed more than 1%. And then at the same time, look at OI change. So some significant OI change you need to look at, either greater than say 2%, 3%, 5%. It depends on you, but basic would be the minimum, barest minimum would be 3%, greater than 3%. So similarly, do the same, or for this 60-minute section, you can just say, I want to look at what is long buildup, LB, and press enter. So you get 3 scripts. So these 3 scripts are the ones that when you are looking, when you're doing this at say about 10:15 in the morning, then you get scripts that are moving at that point. So once identified, then you can take a look at the futures chart, or you can go to the trading terminal you want, whichever charts you want to look at, you can look and then add technical indicators further, and then you can see what trades you want to take. So this is the most basic way to filter. The other way, this is for intraday also. And then when you are, say, you can look at this in the afternoon and decide which scripts you want to just carry over to the next day, if you want to take trades now and then carry over, something like that. If you positional, if you want further analysis you want to do, you can look at day-wise price in OI. This tells you what is happening. This 5-day, the last column here, this is the most important one. This tells you over the last 5 days what is happening to the buildup. So basically, we are checking 5-day price change, 5-day OI change. Based on this, we populate the buildup. And this buildup is a single day price change, Y change. This is the buildup for a single day. So this 5 day is the most important if you are doing it positionally. And for scripts, there is another tricky thing that you will have to look at. Say, I take this. Now, what you need to do is, now this is the start of the month, so it is fine. You are watching the current expiry. But once, say, a week or 10 days is over, I would suggest you watch. Kindly mute, please. Kindly mute. Yeah. So once, this is very true for stocks. If you're looking at stocks, then you need to, once about 10 days are over, you need to watch what is happening in the current month and in the next month, because the trend, once it moves, and once 1 or 2 weeks are over, we see that a lot of OI starts getting built up in the next month. And I have seen that. Now let me show you this example here. If I look at March, if you see, it's all throughout, it's short covering, shows short covering over here. So the thing is, lot of data, this OI is decreasing. It is actually moving to the next month here. And here the OI is getting built up. It had started getting built up from 9th, 10th March or so. And this was in for the April contract. So you need to look at the current month and the next month. It is very important. You do watch, or what you can do is you can look at combined OI. I would still suggest look at months separately. So now for April, this is fine. It is still start of the month, so you can take a look at this. But 1 week from now, I think you should start monitoring the May month also, and see how the OI is moving. Because you would see a lot of OI going there. So you will know what kind of buildup is going on over there. You can take a look at that and then decide. And here, obviously, once if you see long buildup, then what you could do is you could go and take a look. Let me see the example we're looking at. You can probably have your own indicators that show you a trend for positional. Take 60 minutes or so, and then take a look and see how your indicators, what they're showing, what the trend is. So have both, do analysis on day wise, and then 1 minute. Yeah, take a look at day wise, and then go to your futures chart, and then see how the price trend is, and then based on those two confirmations, you can take the trade. This is what I would suggest. So this is for stocks. Another thing is, in general, to see what kind of trend is there in the market. Just watch this OI change, volume spikes scan every day around say 2-3 hours after market starts. This is just to give you an idea of how much volume is coming into the market. What you should see here in the volume change column, if the market is bullish, if currently based on your option chain analysis here in trend interpretation, if it is bullish, you need to see lots of 100% volume changes by afternoon here. Say you can take a look at afternoon and see if you're carrying something, if you're carrying bullish positions to the next day, then you can check and come and see here, see how many 100% volume changes are there. And out of those, how many are bullish? So if you see the market is really strong and it's strongly going up, and then you don't see too many 100% changes, then there is some problem here. I mean, the volume is not supporting the move. I've found this lots of times. We can take a look at market in general. Let me try from here. When 9th March, like market bottomed here. So let me take a look at Let's see here what happened on 9th March. So this is what you have to use. You have to see significant numbers here this way. And most of these have to be bullish because market is really strong. It was really strong on 9th. So similarly, as the price is moving, you want to continuously see there's lots of 100% volume changes here. Otherwise, it's a problem. Here, lots of 100% changes are there, but many of these are negative. So this is what you want to just keep an eye on all the time. Here, lots of bullish. Here, quite a few 100% moves are there. So this, if you watch for a while, along with the market, along with the way how market is moving, you'll get a feel. You'll get a good idea. Because here, once market starts to go sideways, you will see that you will not see lots of spikes here. Let me just quickly take another one. This is still fine. This shows that it's really, there was a good move, 14th. This was 14th. So you need up, whenever there is an update, you want to see something like this. This is what you need to kindly mute, please. Okay, I've muted him. So whenever the market is up, you want to see good volume spikes to the upside where the changes are positive changes. You want 100% plus volume changes. So you want to make sure that volume has come in and that it's not some kind of a fake move here. So here, 21st, I'll check for 21st here. It's still good, bullish. This was a good divergence here. On 21st, actually, the market was significantly down, but the volume was decent and they were all bullish. This gives you an idea that, I mean, it's still not the time for the market to go down. So just keep an eye on something like this. Now here, once you are coming close to the expiry, then this will not work. Now this is not the time to look for this. 25th, let me see. 25th, it was significantly down. There was huge spikes. I mean, 100, 200, 300, 500%. The volume change here is probably due to the rollover effect. So you have to be careful. You need to switch to the next month, especially for stocks. This is true because this was 25th. Same here, volume is coming in. So this will not tend to work once we are very close to the expiry. But until that, you need to watch this. This will give you a very good idea on what is happening, whether the volume is supporting the current move or not. So this is about.
Can buy option.
Yeah, we'll discuss that. I mean, what to do. Now here, once you have identified, then yeah, you could go for how. I mean, whoever asked this question, what do you do? Do you buy options on stocks, or do you buy spreads? How would you, or you just buy the options? How are you doing it? Sorry?
Index options, sir.
Okay, index options buying. Fine. Yeah, we'll go for that. Yeah. This is intraday or positional?
Intraday, sir.
Intraday, okay. Yeah, intraday, I guess intraday that I had given clear, you can take a look at my previous videos, because I would be repeating everything here if I do that.
I think initial question was on stock options buying.
Yeah, that's what that is what I was assuming. So all what I had discussed was about stock selections. Once you have selected the stocks, I would suggest like go for slightly in the money options, or maybe even at the money, slightly out of the money options for stocks, because liquidity may not be there once it goes even a little bit in the money. So there is one thing is missing in our on our site is the liquidity indicator, some kind of, so we need to come out with that. So we have noted that. So, but make sure that you are getting into liquid scripts. One good way is to check the at the money. Just go to any of the current ones. Look at the bid and ask difference. Make sure near the money, at the money, and slightly in the money, slightly out of the money, the bid and ask spread is quite less. So that is important, because that will give you a very good idea of the kind of liquidity is there in the market. So before you get into any option trade, make sure for stock option trade, make sure this bid ask spread is good. I mean, see, if you go a little bit in the money on the call side, if you see the bid ask, this is very wide. I mean, this is a lot size is 500. So this is too wide. I mean, 20 points wide is crazy. So you have to make sure that it is quite, once you go slightly in the money, then things start to get tricky. Just about 2 strikes are probably liquid here. 80 paisa difference here. Then here it starts off with a almost 6 rupee difference. So it starts to get difficult as you go in the money. So, and for in the money puts, it's a lot more difficult because they are not even trading. So only out of the money are liquid. So you have to make sure that this bid ask spread is decent, only then get into it. Otherwise, just switch the stock, go to something else. So once you have identified a script, just come back, check liquidity, and then take at the money long option, whichever side. If you are bullish, then very close to the money, just take anyone. If you want to trade, you're trading a spread, then go out of the money and short. That is what I would suggest. And always make sure you have some kind of a strategy for trading the stock that you're trading at, even the options. Some kind of trend indicator is necessary. I use QnA channels with on any time frame. 53 and exponential is my favorite indicator. So once you find something bullish, and then make sure you are now, suppose you're taking a trade here, a bullish trade here, you're on this day you're getting into a long option over here. Make sure you have some kind of a stop loss in mind, and then either buy over here and short over here, take a spread, or then have go long here with an option, and then have something, a very strict stop loss in mind, and then make sure you get out of it once the trend changes. Because don't stay for too long, because this is, again, as I said, it is either the liquidity is going to go off, or then you're going to get into a big loss. So be precise. You're already, if you're long option, then your time decay is already against you. So just have something precise. Entries and exits. If you have a target, then have some target in mind, and then make sure you get in and then get out quickly, not more than probably a couple of days, maybe 2-3 days, because the time decay is going to be significant if you are just trading a long option. It'll be slightly better if you're trading a vertical spread or a credit spread. So in a credit spread, time decay will be in your favor. In debit spread, at least it'll be, the time decay will not be that much. So you could trade spreads. There's one thing I do, but I do it on index is what I do is basically I'm looking at hourly breakouts here. This is hourly chart. Once a trend is identified, for me, once this particular, the upper line, upper band of QnA channel, if it breaks, So once this is the falling way, this is the lowest point of that upper band. So once there is a close above this, on whatever time frame I'm watching, for me the trend has changed. And once the trend changes, and then hourly also, first hour has broken out, the price is broken above that. For me now this is bullish, so I enter a put credit spread here for bullish, and generally I try to see if I can have a sell a strike below this lower band over here, and then buy something more lower. Now every day, as long as price keeps going, I mean as long as I see this first hour breakouts. So on this day, well, basically nothing. It was not a clear breakout, but on this day it was a good breakout here. So I keep adding. I add to this position. Maybe if from here to here, if it is say more than 100 points or so, then I sell another one here. And then again, this I don't do anything here. Then again here, I just sell something here. So I just keep pyramiding here. As long as this trend is going, and this is fine. And then as once what I have sold here, by this time, if there is a good decay, then I just close off this position, and then just keep taking these positions higher and higher. This is something that you can do. Then I also do butterfly trades that I had discussed in quite an old video, probably 2020 or 21, I don't remember. I had given a very detailed trade on how I trade butterflies positionally. So once the trend changes here, I initiate a butterfly, and then tilt the butterfly, the delta, basically I tilt the delta positive as the trend develops. So it's basically adding put credit spread, or whichever is the lower. I can give you this same 1 minute. There's, I think, one example.
Sir, on this one, take the trade at 2-minute time frame, or I mean, looking at 3-minute time frame, or
this is different. I'm just giving you a way of just adding, like how you are, if you are positionally trading spreads or long options, what to do.
Mm-hmm.
This is for 60 minutes. The 2-minute thing that I tell you is for intraday. And that is based on options. Why breakup? I'll just give you a quick overview once I'm done with this.
Sure.
So this, I was saying, if, for example, if you have this butterfly, this is a bullish butterfly, 17.1, 17.5, 17.9. If you're trading something like this, and then you want to tilt this, if this is bullish, the market is bullish, and now this 17.5 is somewhere over here. So this is call shorted here, and this I've bought somewhere here 17.1, and then bought another one above here 17.9. So now this I want to tilt. Now currently this is neutral, obviously. So this is basically neutral. Now this is going over here. Once this starts to go outside this break even, and the market is bullish. So what I do is this lower spread, this is a debit spread, 17.1 to 17.5 debit spread. I add one more debit spread here. So this I make it 150, and this I make it 100. This I leave it at 50. So what this does is, this will tilt the delta in your favor. At the moment, delta is negative. So as you see that the price, it's going above the break even. So this obviously would be negative. So once I add this debit spread, it tilts the delta slightly bullish. So then it becomes a slightly bullish trade. So that is, I just tilt myself into a bullish trade, and then just continue from there. I used to do a lot of these earlier. I have not been doing too many recently, but I still keep doing this. So this is basically on a weekly, but I mostly would do that on monthly. So longer term trades. So, and those with a larger position size, because then I just keep tilting the favor, even if the market reverses from here. So I just change the delta to negative. So I would add this spread instead of this spread. If I had already added this, I would remove this and then add this spread. This would be a credit spread, called credit spread. I would add this, sell this, buy that, and then tilt this to negative and then write the negative trend. So just one spread, I would just do that. I mean, tilt the data either positive and negative and just write the trend. So this is the way, one way you can do it. You could do the same for stocks. For stocks, you would have to be, you have to do it. You have to be quicker because whatever trade you have a long option, or you have a vertical spread. Once it goes in the money, the liquidity goes out of the door. So you need to be watching liquidity and then quickly maybe exit that and enter another one here. So you would have to do that. You index, a lot of liquidity will be there, but for stocks, that is, liquidity is missing. So you would have to take care of that. So keep rolling the trades. If you are trading spreads, then keep rolling the spreads, close this, add that, keep adding newer spreads here. And long options, again, you would have to do the same. I would suggest spreads for stocks. I think that I would be more comfortable doing that. Okay, so this is it for, let me quickly give you a brief overview of the intraday also, like what I was suggesting. Once morning after the market opens and OI updates, starts updating after 9:18, you can take a look at the trend interpretation here. If it is bullish, you go to options OI breakup. You take a look at whatever is at the money at that point in the morning. You take a look, switch this to 15 minutes. Because I suggest 15 minutes. It is very important because otherwise the trend signals would not be that great. I mean, you would not have the kind of reliability to ride the trend a little bit. So use 15 minutes here, and then I suggest have a chart with. I use a 2-minute chart with the super trend. I suggest this. Now here, the idea is to get an idea of the trend bias, intraday trend bias. So we are using 15 minutes so to get some reliability of the trend. But here we are actually trading, so we need to have a lower time frame because you need to keep your risk low. So just have lower, whatever, 2 minutes, 3 minutes, 5 minutes is fine. But I'm going to be showing you with 2 minute. So once you see short buildup on this side at 9:30, you would be able to watch this because this particular time slot from 9:15 to 9:30, this would get over at 9:30. And then you have short buildup here and long buildup on put side. So this indicates for me, this is a strong signal. A trend bias signal. This is not a straight away a signal to go and buy this option or short this call option and buy a put option. But this just tells you that there is short building up on call side and long buildup building on put side. So you go and take a look and see if you want to short this option. Suppose at 9:30 you have gone and shorted this option. Suppose you have shorted. You would take this signal only if this distance is okay, because your SL is going to be somewhere here. So if this distance is okay, you can take this trade. You would probably exit over here. Same at the same time, you put is long buildup, showing long buildup. Open put also. You would sell this because it is long put is showing long buildup. Put is showing long buildup. But here there is no signal here. There's no signal here. So you would not go for this. You will just wait. For call, actually call is showing short buildup, and here call is showing that it is in sell mode based on super trend. So you would sell here but exit here. So this is the signals you can take. Now here at 9:45, this has flipped to long buildup and short buildup here. Now, this is again a strong signal because both sides long build up, one side long build up, the other side short build up. This is what I called as weak signals. This short covering here, or long unwinding, short covering, long unwinding, you can ignore these. But these you need to take these seriously. So here now call build up 945, it shows long build up, and on the put it shows 945 short build up. So at this point, 945, it is indicating that you need to be out of the trade. You need not be here, but you can wait till the price indicates that and exit here. At the same time, 945, it indicates a short. So this is where one would go short the put here, over here. And you can write this here until here, and only then, once you have exited here, only then switch back and take a look at the signal again over here. Don't confuse yourself. Once you are in this short trade here, don't confuse coming back here and then taking a look at this 10-15 long buildup and then thinking that you need to get out of the trade. No, this is only a bias. You still need to take a look at this before entering the trade. You need to make sure that the OI is getting built up on which side, and then you need to try to be on that side along with price. If price is not agreeing, then you need to be out of it. So that is why here we were not in the short trade here, because OI was indicating a long buildup. Now later we have come back, and then we entered over here at 945. Then only will be out only by 12.7 or so. You could take based on, if you are trading size, then you could exit once you get a significant swing, downswing here, you could exit some here, you could, on this downswing, you could exit some more here, the rest of the position here. So you need to decide and manage that, but this is just to give you an idea of where to enter.
But Srikant, the chart what we see is 15 minutes, and
the chart is 2 minutes.
And
chart is, yeah, because you see, if you flip this to 5 minutes, we will be giving 3 minutes also. Then what you will see is you will get too many very quick signals.
Achha, so you are saying that chart, this open interest, we can keep it in 15 minutes.
15 minutes is fine, because OI will build up slow. OI will build up very gradually. So you need to, what this will do is, this will give you keep you in longer trades. The bias will keep you in longer trades. This will be especially clear on Wednesdays and Thursdays, when it will get you into very, very big trades. I have seen this. I mean, this for now, what it is going to happen, we are looking at trades on Friday. So this, I mean, it will keep flipping you in and out. You'll still capture this big trade, you'll definitely capture. But you'll see that on expiry trades, many times what is going to happen is you'll get in and then you'll ride the whole day. It'll happen many times. Of course, this put trades where these two were quite decent. But and another thing to remember here is that on the buying side, you have to be really, really fast. You have to be precise, because buying intraday, it's going to be tricky, very tricky. So you can do this very comfortably. Selling, when you're selling, you can be very comfortable. But buying, you really have to probably trade in multiple lots, and then as you get this upswings here, once you get an upswing, just get out of the trade, at least part of the trade, because you need to get in, get out quickly. Basically, you can't stay and ride the sideways moves, because then it is going to be a problem. And with buying,
Friday IV was going down, so call side this premium was decay.
Yes, exactly. That is going to happen. Yes, very true. So lot of decay was there, and
because VIX was down, no?
Yes, very true. Yes. So this is the basic idea. So 15 minutes analyze open interest, and based on whatever the bias is being shown, so just write it out on the option chart on a lower time frame. You can probably even do 3 minutes. I mean, it depends, because you may be able to capture longer trades. So you can decide that. I mean, it's up to you. The idea is to just pick something and then just stick to it. I mean, sometimes it look like, I mean, in this case, once the market is really trendy, so then slightly higher, like 3 minutes will work much better. Sometimes you'll see that 2 minutes will work much better. It'll get you out of the trade quickly. But once a trendy move is there, then 3 minutes will work
But
better.
our chart is slightly delayed data, no?
It is 1 minute delayed. Yeah, 1 minute delayed. You can use trading terminal charts. You need not just stick to these.
Yeah.
So the idea, I'm just showing you the idea. You can monitor this here and then switch to your trading terminal charts. If you have zero dot, you can use trading view charts over there. Real time.
Because in bank, 1 minute it can go up 200 point down.
Absolutely, very true, very true. Yes.
But when can we get live data?
Live data.
In trading view, it will come?
No. Trading view, we are only going to use its charting software. Actually, we are not going to use their data, so it is not going to be real time. The same 1 minute data, we are going to feed it to it, so it will still be, the chart will be exactly something like this. The data is going to be something like this. That
it will be delayed.
Yeah, delayed by 1 minute.
Okay.
See, if we have to go for real time data, then one thing, we need a lot more subscribers, and then because we want to avoid raising prices too much, we will still have to raise prices at that point, or we'll have 1 minute at the same price, but then we'll add real time as an add-on subscription. So whoever wants, so real time, whoever wants streaming, all data will be streaming. Then everything, each and every tool will be streaming.
Okay.
So, but of course, OI will still update every 3 minutes, but price and volume will stream real time.
Yeah, price is important.
Yeah, so that we'll do that, but that is going to take time, and it is going to be add-on subscription whenever we add it.
Right.
OI का real time नहीं मिलता है क्या data?
नहीं, OI real time आता ही नहीं है. NSE every 3 minutes उसका क्या compute करना पड़ता है उनको. तो वो लोग हर 3 मिनट को ही करते हैं कंप्यूट. सो 3 मिनट के पहले आपको किसी भी डेटा फीड में नहीं मिलेगा. रियल टाइम टिक लेवल डेटा फीड भी अगर जाएंगे तो उसमें हर 3 मिनट को ही अपडेट होता है OI.
ओके.
राइट. सो वैसे भी इट्स ओके, बिकॉज यूएस मार्केट में तो एंड ऑफ डे ही अपडेट होता है OI. वो 3 मिनट को भी नहीं मिलता है.
Everyone is looking at 3 minute delay, so no one has any edge, right? So everyone is on the same level.
Yeah, exactly. So even in real time, they are on the same page, so it's fine. So anyway, that is the reason why I mean delay it. I mean, you make it 15 minutes, so there is no hurry in this, because you need to. Here you are just spotting trends, because overall broad trends you want to only decide on that. It is very important that we should not get very precise with open interest analysis, because it just doesn't work like that, because you can very well spot broad trends here. Actually, especially positional, this OI analysis is going to be a lot more helpful. I mean, if you are looking at cumulative OI, for combined OI of 3 months, so that kind of analysis is really very powerful. So broad trends can be identified very well using open interest. So it is important not to get into lower time frames like 3 minutes, 5 minutes and all that. So stick to 15 minutes, spot broad trends, and then the idea is to capture big moves like this. So that is the idea. And here getting into in direction of the price, getting into trades in direction of the price is important. So that is what we are trying to do here. Identify broad trends here, and then just get into a trade and sit there and hope that we get into a big trade. So it will happen. I mean, especially if you're looking at option selling, then it is going to happen frequently, especially Tuesdays, a lot more on Wednesdays and Thursdays. You will see that you will be able to capture bigger moves if you just do this. If you see here, I mean, all this, these are weak. These long buildups were there. Once you get into a short over here by 10:15 or so, you will see other 10:45, 11 o'clock, 11:30, all these long buildup strong signals were there. But if you see, there's nothing here, no bullish signal at all. Of course, if you are on 2 minutes, then maybe you would have got stopped out somewhere here, but you would have got in again. You would have got out here and then probably got in again here by 12:40, 12:45 or so. Let me check. See, again, you would have got in after 12:45 here. After 12:45, there were no strong long build-up signals. Long build-up on put side with short build-up here was not there. Long unwinding was there. So this you would ignore. This was there at 2:30. 2:30 was a strong long build-up signals on put side. But here there was no signal, even on a 2 minute. 2:30, like there was no here. It came very close, but you did not get the signal here. So you would be able to ride this trend down here. That's the whole idea. So you try to be as much as possible, identify these broad signals and be in the direction of the trend. So main thing is price. I mean, nothing beats price, because this is where you're actually trading. So your analysis here is fine, but this is just broad patterns, and actual trading goes on here. So make sure you have some kind of a trading trend-based indicator, and then just ride the trends. So that's it for this intraday thing. This is probably more than enough. You can do all sorts of fancy analysis. We have a lot more. You can, if you want to dig deep into what kind of trend is going on. See, this is multi-strike OI. Trending strikes is quite important. You can take a look at it and select OI change here. Trending strikes, build up. Uncheck multiple colors to get a quick snapshot of what is happening. Once you see a lot of green here, okay, for what I've done is, you might see reds here for put, but I have changed. You can go and change here in this. For puts, you can have green. So you can change this. You can have calls, you can use red color, put, you can use green. By default, it will be this. So you can change it here. And then these colors will change everywhere in the website. So what I do is I just uncheck this. I don't use multiple line colors like this. So this to get a quick snapshot of what is happening to the trend here. Now, once I see here, this will show you 5 trending strikes. So once you see most of the lines are green, you know that the market is bullish. So if you see lots of reds here, then you know that it is bearish. So to get a quick snapshot of what is the bias of the open interest, what is there in the market, you can do this. Now, if you want
a lot of green lines over here, and then we can choose any one of the green lines and buy the index, right?
Yeah, you can. I mean, you can. This is trending. This just shows you that these puts are trending. The open interest for this buildup is getting. I mean, lot of open interest is getting added. So buildup is happening on these. So once you know that, then you still need to go and take a look at the option chart and then do the same analysis on 2 minutes, 3 minutes, plot a super trend and make sure you are in that direction. So this is the other way you can do it. Instead of
option chart, particular strike, right?
So
any
like,
of the
yeah, I mean, like you can go to the terminal, like what we just did here. So you need to just take a look at this. If you are seeing that the most trending strike is 17,500 PE. So go to 17,500 PE and see what is happening.
CE, right?
So this was PE, right?
Put. We have to buy CE, correct? No. As an option buyer.
Yeah, that's right. But then the put is actually getting built up here, long build. Okay, 1 minute. Yeah, that's right. You'll have to go and buy the PE. Actually the in the money puts are getting built up here. This means that the price, like the index is going up. That's right. You can't just go and buy this. Obviously, you can go and short this put basically, or you can just go and buy the call. It depends.
Buy the ATM call. Yes.
Okay. Yeah. So the idea is to get this gives you a quick snapshot of the price trend, the trend bias that is there in the market. After that, then you can.
The time we have to see this, or I mean, we have to start seeing this after 10 or 10:30.
No, this starts off immediately because there's no delay in this. Once it starts off updating at 9:18, so 9:18 you get the first OI update. So after that it starts off. You can start looking at this after. You can keep this open, and then that's it. You can take a look at it.
But this would help on a trending day, right? On a maybe sideways.
We can take a look at historical one day. Let me take a look at sideways day, which was this one, 29 March, or rather, this is more sideways, 30th March. Let us take a look at 30th March. Say we 30th March. This would still tell you that, of course, now we are looking at it during the day, it will be very different. Now what it is showing is, it is showing at the end of the day what is happening. So it is still telling you that it is mostly bullish to the upside. When like at the end of the day, at least it is showing bullish. You can take a look, even on a sideways days, what is going to happen is, see this part here, it is going to show you bullish all the way until here. Probably it is going to flip somewhere bearish over here. And then it'll show you bearish throughout here, or it may be mixed here. Or you'll get mixed signals over here of the bias. And then again, it'll start showing bullish over here again. So sideways, it is going to be on and off day. You might get signals, both side signals somewhat, or maybe mixed signals. But on many days, if it is going to be, sideways to bullish, then it is going to show you bullish throughout the day. It is going to show that. So you can take a look, you can watch it and you will get an idea. Monitor it for a few days, you will get an idea. So this is one. There is also cumulative OI change. This is going to be a lot more higher level snapshot, because this you have seen different lines in multi-strike. And here, this is going to actually sum up all those OIs and show you as a single line for puts and this line for calls. Some of the OI changes actually over here. That is what this is going to show. So here you can take a look at PCR. You can keep an eye on PCR also. How it goes, the direction of PCR is going to give you a good idea of the direction of the trend. So once this goes flat, it means indecision. So since from start of the morning, it's quickly trended up. So after that, it went flat. So from here, it was saying that it was mostly flat. So it is saying it is indecision, but overall, if you see, it is strongly bullish, because the put line is on the top, significantly on the top. If you want to see the difference over here, you can enable this line also. This orange line will give you, if you disable this will quickly tell you the difference. This is the difference between the call and put. If this is above 0, then it is bullish. So this is going flat. It indicates that there is nothing happening. The OI is like kind of flat. Like it is not an indication for bearishness. It is just says that there is a pause in the OI buildup.
Yeah, and
but market continues. Has continued to go up. It can happen. I mean, it's not that if the market is bullish, that OI will continue to show bullishness. It may not. The put side may not build up. So you need to keep an eye on that also. If you see, the difference between these two lines is the same for the rest of the day. So it just says that equally, though put side OI is getting added, call side also is getting added. So it is neutral mostly over here. So since this is mostly above, the OI is greater than the call side OI, then it is bullish as of now. That is what this indicates. So this is another one. So you need not monitor all these tools. You can keep an eye on one of these tools. Similarly, the third one is total PECOI. Here there is one additional. This is very, very similar. You can keep an eye on this. Okay, this particular spike is something that you can ignore this. We have taken up with the NSE. There was some issue with one of the NSE data file that we have got. So we have taken up with NSE. They are looking into it. For some reason, they sent us bad data. So this is due to that. So you can ignore it. But yeah, this is another one tool that if you want to dig deep into what is happening overall with all strikes, or if you want to see near ATM strikes, what is happening. So you can take a look at this. And this auto adjust, you have to be a little bit careful because it shows you the dynamic. It changes this whole scan or report to a dynamic report where as the price moves, these 3 strikes keep on changing. So we have said near ATM 3 strikes. So as the ATM changes, these 3 strikes will change automatically, and this Y change will drastically change. So you have to be very careful. People have got confused.
But what you suggest, all strike price or near ATM?
I generally monitor all strikes, but there are times when I look at 3.
Because in both it is showing different.
It shows differently, because what it shows is all strike is going to give you a broad overview of the overall trend of the market for the day as a whole. Now this is going to tell you how the OI is placed at these 3 strikes. So here actually it was quite negative, but then as the price came to these 3 OIs, because here the price may have been different. The strikes may have been different over here. Maybe 1750 would have been the ATM here. So here it was negative. I mean, people were actually selling here. That is what this was indicating when the ATM was around 750. So it was above this. Now here, after that, the price came down. Okay, this is futures. This is probably this is being indicated based on spot actually. Probably it's that way. But this is what it indicates. At these strikes, at these 3 strikes, what is the OI? At the moment, it is neutral, because 91,500 OI is basically neutral. It is not like lakhs of quantity is negative here like it was earlier. Here it is neutral. That is what this indicates. So it is not thoroughly bullish here like all strikes is telling you. So this you can monitor this throughout the day. But then you should know that this is only going to tell you what is happening at the current ATM and in and around the current ATM price. So you have to be very, very careful. This will tell you, can give you a completely different picture compared to all strikes. All strikes is going to give you an overall scenario for the day, what is happening. And here what you can do is, there's one thing to watch out here is this last column, OI change trend. This is nothing but the difference of this and this. Now this 5 lakhs is the difference between this is 1.5 crores and this 1.54 crores. This difference is 5 lakhs here. So this difference is, what you can do is, the thing to monitor here is, once as the day starts, you're looking at this, whatever the strike selection, if you have selected all strikes, you need to watch the size of these changes, because each 3-minute time slot here, just watch 3 minutes here if you want to do deeper analysis, and look at the sizes here. If you see in lakhs, then this is significant. Now this is significant. And then once you're seeing a reverse signal, something reverse negative here, then this reverse you need to compare with what has happened in the last, say maybe 10 changes here. There's absolutely nothing. This is not significant at all. This negative is not significant. So you can safely ignore this. So if you do this, then once you see this, even this is not significant compared to the last, say 10, 15 changes. So this will tell you, if you keep monitoring this, I mean, today, this day, it was totally bullish, so it is not significant, but you can quickly catch trend changes here, because they have been last webinar when we were discussing, there was a huge, like something like 20-25 lakhs figure change was there, negative here. Then after that, the trend changed totally. So you'll see that, and this 25 lakhs, that time it was significant compared to the last 10-15 changes. So you just keep monitoring this. Whenever you see something reverse signals, you're getting reverse signals, then see how significant they are. Now here, as the time goes by, I mean, there was a big signal here, and there was smaller reversals here. So it's still not significant. Negative are there. Over here, now this is significant. So you need to watch. Then it just tells you that you need to watch what is happening closely. around, this was around 12, around this time. It was just negative, but you still need to, at least it will tell you that you need to be cautious over here. Maybe just plot some support resistance areas and just keep an eye on VWAP and see if the price is going to break below VWAP. Then you maybe, because once price breaks below VWAP, what is going to happen is you'll see significant lot more negative stuff coming here, negative changes coming here. So at the moment here, you saw that a lot of negative was there, changes were there, but the price was still holding up. It shows you this green here shows you that the price is still above VWAP. So you can just check this, or you can check on the chart. So, and this here again, after that, the price again flipped to green. The Y changes flipped to green, and then these are not significant at all compared to what has happened over here recently. So that's it. So this you can drill down and take a look. Again, this should give you some caution over here. And then you can take a look. Price still is above VWAP. Of course, this was a different day. It was a totally bullish, so it doesn't make sense to dig too deep. But
sir, what do you recommend on this page? All strikes or maybe near ATM strikes?
If you see, if the market morning, if you see something strong trend is built up, has got built up, price is not going up and down below VWAP, and is staying above VWAP, just stick to all strikes. Just stick to all strikes. Yeah. Even overall, you still need to keep an eye on any day. You need to keep an eye on all strikes, because this gives you a broader picture. So then if you want to dig into and see quickly what is happening at the current strike, then you can take a look. But this, I mean, once you change to ATM, near ATM 3 strikes, auto adjust, then there is no point looking at this red and thinking, oh my God, there was so much negative was happening over here. This doesn't make sense, because this is going to tell you what is happening in the latest time slot. Latest time slot, what is happening. You need to take a look at this and then decide, or maybe 1 or 2 close by, and then decide whether this is significant. Here it just tells you it is neutral, nothing great is happening over here. So it's like that. So this is why change trend column. This is the most important one over here. Other than, of course, this is the main one here, the diff P OI change, difference between P and COI change. This and this together, you need to keep an eye on these 2 columns continuously. So this is another one. So these are there: multi-strike OI, cumulative OI change, and total PE COI change. These 3 allow you to dig into the deeper OI analysis. So you can keep an eye on this.
Can you just explain IVR and IVP?
Yeah, sure. Okay, what this tells you is, this is the current IV. This is the IV range for 1 year. And IVR will tell you where the current IV is within this range. So 22% tells you that it is in the bottom part of the range. It is in the bottom part of the range, bottom 22% of the range, because this within this range, 19 to 95, 36 it is in the bottom part of the range. This is what tells you. So it tells you that overall IVR is indicating that the IV, this particular IV is low for this. It is quite low. Now, once this goes above 40, 50, 60, then it starts getting high. Similarly, with this tells you within this range, and this IVP tells you in a percentile basis in this range, how many readings have been above this particular IV. So 50% basically indicates half of the readings in the last 1 year have been above 36. Approximately half have been, below this. Now, if this, you're looking at this 77%, 77 here, 77 says 77% of the times the IV has been above this value, 77% of the time. And this 42 tells you that in this range, this is at the 42% level kind of thing. 42% level.
But for option selling, IVR should be higher, no?
IVR, yeah, it should be higher, 50, 60, 70%. IVP should be at least above 50%. Above 50% is better.
Then we can
for
sell.
selling, yeah, and flip it for option buying. But this is for mostly for positional, and this for intraday, it doesn't make sense.
Yeah,
This is basically only for positional.
Okay.
Is lower the better. If something like 20% IVR 20 IVR is better, and this also below 40 is kind of better. That will be better. So below 40 will tell you that 60% of the time IV was more than this. So this 40% times it was less than this. IVP tells you that. So then that will be kind of low. So it indicates that. So this is about IVR, IVP.
Can you add result calendar?
Just a minute. Just give me 1 minute. Sorry. Yeah, tell me. Sorry.
Can you add result calendar?
Sorry, I didn't hear you. I didn't understand.
Result calendar.
Your voice is not clear, sir.
I mean the result date.
Result date. Earnings results. We don't have it at the moment. We plan to add it. I think we have started getting data from somewhere. We have from a source. So we'll have to create the calendar and make it available. So we'll try and do that. So at the moment we don't have it.
Can you tell about this open high?
Open high, open low, yeah. I'll start with the futures once and day open here. Okay, we have two options here in futures: open high, open low, day open, and time frame. Day open is what we only show scripts where their day open, the current day is open and current day is high in open high are close. They may be same or slight difference. We allow a 0.1% difference here. So if open and high are same, then we display here. Once this condition gets broken, we highlight it with yellow. Like it started with open equal to high, but later the high changed or it went higher. The high went higher, like it was 946.7 was the day's high. So this market open condition got broken. So we display.
Bharti.
So we mark it as yellow. Can you mute, please?
Instagram.
Yeah. Just a second. And wherever this yellow highlight is not there, it just means that this condition is still there at the end of the day also, throughout the day. So basically, same open high was same and the latest high also was same. So basically, these are the scripts that you need to keep an eye on, the ones where this condition holds, because those are the ones open high would be bearish and open high is supposed to be bearish. So this is supposed to be bearish and this is open low is supposed to be bullish. So once yellow marked ones are the ones that have already broken that condition, so they are not interesting anymore. So the ones that are not highlighted in yellow are the ones you need to keep an eye on throughout the day. So if you are trading long, that you want to take bullish trades for the day, then you need to keep open under open low. You can take a look at these, which are not marked in yellow. And then you can take a look at the chart and then you can decide if you want to take positions, bullish positions here. Now, once during the day, now suppose you don't want to take a look at this, you just want to know, now current 16-minute candle, open and high, I want to know which are the scripts. Then this will tell you that time frame, current 60-minute. I mean, you can go lower time frames also. I think 60 minutes is a lot more. It makes sense because then it is significant. For hourly candle, if the open and high or same, or in this case, it is not same, but you will find that it is within 1.1% difference. So they are close enough. This one is same. So this one is same. So even this again, same highlight, we highlight it in yellow if this condition breaks for the candle. If the candle starts off with open high same, and then the high breaks later, so this is not bearish anymore. So we mark it off in yellow. You can keep, if you are trading bearish, then you can keep an eye on this. So ideally, once the hourly candle starts, then you can take a switch to this 60-minute, and then you can start looking at it. So it doesn't make sense once the current candle is coming to a close, then there's no point looking at this. You need to look at it once the hourly candle starts for this. So then you'll get these scripts, and then you can start monitoring. After 5 minutes, 10 minutes, you'll know probably scripts that are not highlighted in yellow are probably going to stay bearish, or in this case, stay bullish for this 1 hour at least. So then you can take positions in those. So this is for intraday. For every hour, you can probably go and take a look and see what you want to trade. You want to do a quick trade for 1 hour, then you can probably just get into this and then probably hold on. As long as this open low holds, you can hold. Below the low, you can have a stop loss, and you can ride these, whatever price it is going up, you can ride this. Again, make sure you have already decided on the current day's trend bias. And then if the bias is bullish, you're bullish for the day, then just focus on this. Don't try to go against the trend, ideally. So then focus on this. Then you might get a lot more better trades over here, because it will be in the direction of trend, market trend. So this is about this. Same, we have similar for options. In case of options, you need to select which symbol you want to look at. And then if you go to day open, then it'll tell you day open. Options move a lot, so it is likely that whatever you see based on day open will probably get invalidated quickly. And this is because obviously the day was bullish, so this has not got invalidated. So you can, these are still valid, but this already got invalidated.
Hello.
Hello. Yeah, tell me.
Shrikant, just now you were showing the previous screen.
Yeah.
In that, why was Bank of Baroda being, Bank Baroda 106, both of them open and low are same almost, but still it is highlighting yellow. Why?
Because I think it may have broken this within the 1 hour. It may have broken. I think it may have broken this low.
Okay. And this is one thing.
Yeah.
And I wanted to suppose I'm doing intraday in futures. Then in that case, I generally use the option chain, the second option chain which you said, na, you should look at that trend.
Option chain. Okay.
And the second option. Yeah. I look at this, generally I watch this trend of bullish on both the put and call.
Okay.
Near the at the ATM strikes level, and that is how I trade. But sometimes it is very, the panic situation comes when you enter a trade and then suddenly everything turns out to be bearish. But at the end of the day, whatever whatever I had studied, it will be I'll achieve my target, it goes there. But during that panic situation of 5-10 minutes, you quit that trade, and futures, you make a huge loss. In that, how to interpret, little, how to get that comfort key? No, I'll wait in this trade. See, I generally try for what? Futures momentum.
Okay.
Intraday.
Fine.
So just can you explain me how can I make use of this chart and be comfortable? No, I can wait in this trade.
Okay, you are getting confused once this trend interpretation changes. What? Because this
interpretation changes, and what happens, I keep a stop loss in my mind of 0.5%.
Okay.
I don't keep a bigger this thing margin. So
Okay.
0.5% stop loss. So it is but obvious that that happened with that Bank of Baroda share only few days back.
Okay. Okay.
So I just want to know, okay, how to be on a comfortable, and then later end of the day it was okay. It reached the target and it was on a higher side. There was no issue, but I had quit this thing and I made a big loss.
Okay.
So how to?
Yeah, one thing, what is going to happen is this is going to be very quick, because especially for stocks, because this trend interpretation OI will change quickly, and this interpretation also is going to be changing quickly. But you need one other way to broadly classify the trend. That is one. You can take a look at what all we have discussed, like multi-strike OI.
Okay.
One of these multi-strike OI or cumulative OI change or total PEC OI.
Okay.
So based on this, you need to make sure you classify the broad trend to begin with. And the other thing is, finally, if have some, are you using any trend indicators? Super trend or whatever?
No. I mean, obviously I use, I select the trade on the basis of a daily chart, and then I watch 15 minutes chart without the indicators. I don't go for volume, and obviously volume I check.
Okay. Yeah, ideally have some kind of a trend indicator that will keep you in the trend. That is one, because you need to have fixed rules ideally to enter and exit. So that is one. So if you purely trade intraday only, right?
Yes.
Then have some sort of either a Keltner channel or super trend or whatever. Experiment with it, for backtest it visually on the charts for a while, for a few days. And then based on that, form some very strict rules where you're going to enter and where you're going to have your stop loss.
This channel is which? Keltner. Okay.
Keltner 53 exponential, 50,3 exponential. Yeah. So
by default, is it there available on iCharts?
You need to click this button and add it from here.
Okay.
And then
53 exponential.
Yeah, and then click here, select settings and change it here, 53.
Okay.
And then once you do this, save this template here at the bottom that you see. Save a template so this indicator remains.
Yes.
On the chart. So do this and go down to a comfortable time frame. You need to, based on this, if you can take this distance, because if you're entering a bullish trade here, then either have your stop loss below this red line here, or if you are still on a lower time frame, I'm saying just for the sake of discussing, it would be crazy, but whatever time frame you're taking, wherever you have your stop loss, if you are taking it below the lower band, this distance should be comfortable to you. I mean, it should be perfectly fine to you. Perfectly fine in the sense, if you take that loss, then it should be a very tiny loss compared to your equity. So once you do that, then you're mainly, the tension will not be there.
Okay.
That is one. If you are trading futures.
And futures in this case, suppose now what you said, now if I'm comfortable after seeing this band, okay, I need not quit today, I can carry forward, because even I don't select as intraday, I go for e-margin.
Okay.
So, I mean, I can carry forward this trade in case, I need not panic, I think, within 15 minutes to quit.
Yeah, then ideally, you need to be on a slightly higher time frame, ideally. So because 15 minutes is quite good for carrying it to the next day. For few days, actually, you can easily trade.
Okay.
So you can use this, but then you have to make sure if this particular distance is not right for you for this futures, consider using options, because then suddenly.
I'm not comfortable with options as I have not studied 100%.
Okay, fine. The reason why I'm saying is for futures, your delta is going to be 1. So Or if you take even slightly in the money options, it is going to be, the delta is going to drop down to say 60. So it is only going to move 60% of futures. So it will be slightly comfortable. So it is only to make this you're comfortable. It will just increase your comfortable. That's the comfort level. That's the only thing. But if you can, on 15 minutes, if you can tolerate this particular loss, suppose you are buying over here, somewhere here, and then you are having your SL here, and you're trailing it this way. So if you can take this initial stop loss this far away, and it is not a large part of, if you take that loss and then you'll not lose large part of your equity, then it is fine. Then you can continue using futures and then trail it and take it to next day also. It should be fine. You can do that. But form strict rules, decide what time frame you are going to use, what indicators with what settings you are going to use, where your entry is going to be based on which condition, exit is going to be based on which condition. Because then what is going to happen is your tension is going to reduce. I mean, you'll know that, okay, this is the max loss that is I'm going to have. And that's it. Then it's not that bad.
I decide on the entry point before, I mean, I do my studies and then I decide. And so entry happens at the, but then it's just that, you know, the panic situation that the immediately the price comes down, but then later again it picks up. So,
yes. No, you need to, I mean, that is the only way to do it. I mean, once you decide on the rules, then you need to convince yourself that you are actually, you have a trading system and that you are just need to let the trade run through whatever your rules are, and you need to follow it, because you only then you will realize the probabilities of that your trading system. Because whatever profits are there, you wait for those profits and take whatever losses are there, you take, and then based on whatever probability is there of your trading system, you're going to realize if you're going to follow those rules. That's the only way. You just have to convince yourself. That's it. I mean, initially it is going to be there. That tension is always going to be there.
Yeah. But generally what I feel, all the F&O scripts, the ones which are in the uptrend, they next day or the 2 days down the line, they come up. I mean, they give you the given targets. So it's just that day which has to pass. And in that mind, you know, I am doing intraday. That's the reason I come out of it. And then later you realize, this could be carried.
Sure.
Forward.
Very true.
Okay. Thanks a lot.
Okay. Welcome. Yeah.
Srikanth, do we have a same option chain like for stock also? Like trend and all this thing?
Yeah.
Yes.
Everything is the same. Yeah, everything is the same.
Just
like here, Bank of Baroda. Same, exactly same.
Okay. That is good.
Yeah. All tools, same, everything will work similarly as long as they're liquid. So the liquidity is the only problem. So that's the only thing to mind. That's it.
Okay.
Now, Srikanth, what does, see, in this chart, what does this mean? Like at 117.5 strike, everything is 0.
Yeah, that means it has not traded. That's it. I mean, no trading has happened. I mean, this probably, what they do is strikes can suddenly get introduced, but no, this should have got introduced earlier only because these are already there. So I'm very surprised why this has not got traded, but yeah, this has not.
And no, this has happened on last trading, that is first, with some other scripts also. By the, I mean, since I sit on the terminal, I saw 2 or 3 scripts by 3:30, they were 0 at a certain strike. That means there is no trading at the strike.
Yeah, it happens because even these strikes get created suddenly in between.
Okay.
I've seen that happen. So it happens. I don't know if this was the case for this particular option, but it happens. I mean, and it could also be that this has just not traded, but I doubt. I think this has got created for some reason suddenly, because otherwise it would have not got even this and this.
I mean, this happens with most of the F&O scripts.
Yes.
Generally, by the end of the day, around 3:25, you'll see many of them get into this.
Yes,
there are no trades.
Yeah, happens. Yes. Okay. Stock scripts, this is very common. Yeah.
Yes.
Okay.
For seller, ask price is important or bid price?
For seller will be able to, if you are getting into a trade, you
For
will be able
selling.
to sell only on bid.
Okay.
If you're going to sell, and for buyers, they'll be able to sell only on ask. So for sellers, bid is important because you'll be able to sell only on bid. Generally,
So selling price is 1955 and the ask price is 1975.
yeah. So this is the bid ask difference.
Hmm.
That's the thing.
Shrikant, can
Yeah.
you see? Can you open up that along with this trend build up?
Why? Which one?
I mean, see, no, Greeks, whatever they are in blue, na?
Okay,
In
okay.
this same chart. Okay. Now this interpretation is like what is important? Like here now in this case, this shows there's a short built up, a short build,
Build up.
and
Yeah.
then build up, and in the put side it is bullish short. This
Yeah.
all this trend is from the point of view of sellers, right?
Yes, yes. This is point of view of sellers. Yes.
Okay, so what this means that they feel the sellers are feeling ki this will go
Yeah.
call side, the prices will go up.
Yeah.
That's why they are bearish.
Yeah. The simple reason why this is generally analyzed from a seller's point of view is because sellers are
Market,
mainly at risk.
Yes,
Their
yes.
risk is greatest, and they will have to unwind because buyers can wait. I mean, no problem.
Yes.
Even the whole 25 rupees is gone, it is not a big loss for them. But for sellers, they'll get really. I mean, it is going to be a big problem. So they'll have to unwind, and since unwinding will be there, sellers have to unwind, that is the reason why this is analyzed from seller's point of view, because that is where the main pressure is. That's it. Yeah. So
Generally, you should trade like a seller.
at least analyze from this point of view. You should know that what is the position of sellers. So even for buyers, it is important to analyze that way.
So for puts in this case,
yeah.
For puts in this case, are you saying like sellers are basically covering or they are doing build up?
No, they are actually, they are selling puts. They are selling puts thinking it is going to be bullish. At the same time, call sellers are also active. So it is basically, that's the reason why we call this as an indecision or sideways, when one side is bearish, other side is bullish.
Okay.
Because both sides are selling. Both sides are selling actively. So they are thinking that that's the reason why it's in a kind of equilibrium at the moment. So until both sides become bearish or both sides bullish, it is not going to be significantly, price is not going to move significantly.
There is no trend.
Yeah.
Okay.
Okay, let me go back to and finish this options open high, open low. The analysis is same. It's just that you have to select which strike, which symbol you want to look at, and then analyze it that way. Day open again is based on day open. So it will just indicate the broad trend. It was bullish. So that is the reason why puts are still showing open high, because they are getting sold a lot. So their puts are bearish in the sense they are getting sold, which is bullish. And here the calls are going up. So that's the reason why open high has broken, because the calls are just going up and up. But here again, I think a lot more important is based on time frame. If you want to enter even short term based on 30 minutes or 60 minutes, you can see. You may not get lots of scripts here, but one or two scripts you may get, and then you can take a look at those and decide. You can even select all strikes and take a look at what all strikes are there. But then you'll get lots of deep in the money and out of the money strikes also. So you can decide on in the money with broad 15 strikes. So this is about options.
In
open
this,
open.
Shrikant, one thing.
Yeah.
When you did near ATM strike, why for 1 hour, why is it not showing any open high? Because for day open, it was showing, right? ATM.
Yeah, because this will show you only for the current 60-minute candle. Current 60-minute candle open high.
Okay.
So it will show only that.
And day open will show.
Day
from the
open can be,
onwards.
yeah, day open high will be days open, days high. Whereas time frame 60, whatever time frame you're looking at, it is going to show you for that time frame's latest candle. So current candle, that is the candle, actually in this case, it is actually showing you the only 15 minutes, because latest candle will start at 3:15 basically. So from 3:15, what is happening? 3:15 candle, hourly candle, what is open and high? If it is same, then only then it will show. So that happens for very few options. It may not happen for all. Yeah. So this is about that. Open high, open low. Futures, open high, open low. Any other tools you need to cover? That's it. We have about 15 minutes. So let me know what you want me to cover. Anything? Straddle, strangle, anybody?
Sir, currency butterfly, if you can.
Okay, okay, currency. Currency, I have not looked at it for a while now. Let me see. Currency, let me quickly. Okay, currency, currently it is trending down. So it is currently at 76. It's approximately at 76. So 71. Use something like this, 10, probably 20. One lot will not make much sense. I don't know. I think this is weekly. I don't know where the liquidity is. I need to take a look at. Let me look at the option chain also. I've not looked at this for a while. I need to start looking at it. 8th April. Okay, monthly is probably 27th. Okay, this is monthly. We'll look at monthly. Maybe we have, what was that? 27th April. The idea here now in this chart is to, the idea is to make sure that this trend keeps going up. I mean, the trend is up. So now you can apply whatever you want to apply, Keltner, you can whatever time frame you want.
So the gap between the strikes, we should keep it same or like unbalanced?
You can, it is up to you. Yeah, you can. If you see, if you're, if now this is, it is bearish. So you what you can do is, you can keep this unbalanced. You can, just a second.
Broken wing butterfly, full butterfly.
You can. And it is up to you. This is not broken.
If it is going upper side.
This shows upper, but this is actually now a bearish butterfly. Basically, this is a bearish butterfly. See, what I've done is this is 76. It is currently at 76. So this is, I've taken the center price as the 76. So we are shorting 30 lots of 76, and we have bought 10 lots at higher at 20 lots higher at 77, and lower side, we have bought only 10 lots. So this is perfectly hedged because 30 lots is short and 30 lots is long. So it's just that what we are doing is we are heavy on the top. So which is basically, we are saying that the trend has to be, the trend is bearish, because I saw that here we have seen that the trend is bearish. So that's the reason why here we have taken a bearish stance. But the whatever is the stance, bullish or bearish, the price has to go up. Whether this is going up, down, it is immaterial. The price of the butterfly has to go up always. Whatever you are set up. If it is going down, then you are making a loss. If it is going up, you are making profit. So now your idea, whatever trend indicator that you are using, whatever you put super trend, you put Keltner channels, you put moving averages, VWAP, whatever you want, you have to make sure that this is going up. If it starts to go down, it is time to adjust. You have to play with the strikes here. Once it starts to go down, you go and take a look. Maybe the price is breaking out of this area and all that. If it's breaking out of this area, then either you need to come back to neutral stance. If you want to come back to a neutral stance, sell 10 from here, buy 10 here. So make it 10, 20, 10 butterfly, neutral butterfly. Then if price continues to go up from here, you need to go bullish. So you need to go bullish, again short this here, and then add 20 here, add 10 here. So adding it lower side, when you add lower side, it becomes bullish. Can you please, whoever it is, mute please, mute please. Just. Okay, I've muted him. Okay, that's about the butterfly. Any questions here? The basic idea is to how you set it up is important, but I hope you have understood.
The distance between both the strikes should be 1-1, both sides at 76, 75, 77 or 76. We can just move the distance this side more and this side less.
You can. That is another way of doing it. Say, suppose you make it this way. Now, since we are bearish, what you can do is, so now since you are bearish here, this is this, the higher side will be, higher side you can make it, say 77.5. So what we have done is we have increased on the top. So this is on the top, this is say 1.5 rupees. And on the downside, it is 1 rupee. Downside, since the price is going down, we want to keep the risk on the downside low. So we have shrink this and we have extended. This also you can do. This is also bullish. Either this or if you want, you can keep the same distance but add lots extra.
Okay, sir.
Yeah. So it is the same. The idea, if you plot it on tracker, at the moment it is not there in tracker. We will add it soon. Once you add it, you'll see that basically we are making the delta negative here.
Okay.
So whatever we do it here, the adjustments are making the delta negative, and we are going in this direction.
Okay.
This will keep profiting. I mean, this is a very good, because I think the currencies are going to be very good trading option strategies, spreads, straddles, strangles, and even butterflies and iron condors and all that, because you can fine tune your position size very well. Because here,
but basically weeklies are not that active in currencies, right?
Yeah.
You don't have to do in monthlies only.
Yeah, do it in monthly. With weeklies, what you can do is very close to the expiry, you can direct, if you want to sell straddles and all that, and do some expiry trades or close to expiry trades or spreads and all that, credit spreads, all that you can do. But something like this, you can do it in monthly is better, and it will be a lot more comfortable actually. And if you position it properly, and if you have some kind of a trend indicator that you can rely on, then you'll be able to capture this premiums really well. You can do that.
Okay, thank you, sir.
Okay, sure. Okay, so I guess we'll stop here, and we'll continue later. If you have questions, we can do it next week again.